Yo, good morning, everyone. Hopefully, you had a good week so far. Pretty wild delivery so far. But we'll get into it. So, yeah, today's our live trading call. Hopefully, you guys get value from today. Don't forget to like the video if you get value. Subscribe to the channel if you haven't already. We do this every single week. But, yeah, we should have a pretty interesting day today. The only news event that's available is going to be at 7 a.m. So that's kind of interesting. We have Trump holding off on the war. So that's kind of interesting. It would be rocket fuel for this to decline, or for the indices to decline if the war breaks out again. So we got to keep tabs on that. So we will keep our ear to the news wires. But yeah, we see that the bonds are declining aggressively. Basically doing exactly what we said it was going to do. It's pretty interesting how we look over like 6 different assets and they all pretty much dance to the tune that we play. Every buy-side target that we mapped out on Sunday for the yields have been taken out. Remember, the yields have a positive correlation to the dollar, reverse correlation for the foreign currencies and the Nasdaq, well, indices in general. So every target has been met. The overall narrative obviously has been working out. This going higher means higher dollar and lower indices and foreign currencies, and we have seen just that. So hopefully, just in this last week, well, we kind of talked about this being the case like 2-3 weeks ago. So we had accumulation, manipulation for the pound, and then distribution. Now we're in rebalance. Rebalancing what? This inefficiency and this overall power 3 looking delivery. So we may look to continue going lower. This is a much stronger rebound than I would have wanted it to have. We did get back above this fair value gap here. So we definitely got to pay attention to this fair value gap and how it's going to be respected. If it gets respected and we start getting beyond this high to this low's 50% level, we can actually adjust this. That'll be my sell side invalidation, because the deeper we get in terms of this high to that low, the more likely it is the price is going to then turn into a buy model instead of favoring the short. So if, we'll see what happens with this war. There's lots of things hanging over us, but overall, until something changes, we're not going to change our opinion. This is a accumulation phase previously, and now it's returning down to the low end of that. So if this is going to be bearish, we should not have to get beyond this. Again, we have this high up here to that low. If we were to break this level here, basically above the 50%, like I have labeled here, that's our invalidation. So that is what we will be paying attention to for the currencies. I think that will continue to drop. We have a low resistance liquidity down here. Why is it low resistance? Because we have a low and a failure swing. It was high resistance because when it traded into it like this, because it was a stop run. This is also inside that quarterly fair value gap I've talked about for over 2 years at this point. We've just been dancing around it, honestly. And if you take the whole entire range from this low to that high, we're actually resting at equilibrium. So it could be a time when price looks to chill, kind of accumulate in this area. But again, we'll see what happens with the news drivers that come out. There's a lot of things that can happen, right? So, but for now, we're going to stick to our opinion because the yields are rallying so aggressively and the bonds are currently at the moment still declining, looking like they want to target this low, which again, I've had outlined for over 2 weeks. I think we're going to stick to that. We did hit the 2.5 standard deviation from the projection that we mapped out. Triggered in a little bit of a bounce, a little bit of a retracement, but nonetheless, it's clearly in a hurry to get down to this low. If we go to the monthly chart, we could see that beyond that, we have this low. This low and this low together equals a failure swing. So, it's been nothing but bearish, right? We've had little spurts of bullishness, but nonetheless, the overall undertone is this going lower. So I'm very curious to see if we can't tag this low here. So that'll be my general target overall and what the higher time frame draw is. But we'll see what happens when we do breach this low here. If it breaches that low, again, we have this low to that high. All of that should be a completed market maker sell model. Right? We have the origin, we have accumulation, smart money reversal, deep retracement, simply to take stops. And then we had distribution, then secondary distribution. And that secondary distribution, how do we know that that's the case? Because it was very aggressive going into this low. So we know that that is the mode. A sell side sell model is in play. This low to that high, right, that retracement, also created a market maker sell model as well. This was second stage for this little piece right here, right, for this little market maker sell model inside the larger one. So that's the mode of operation so far. It's a sell model. If this is going to be in a sell model, that promotes downside in the foreign currencies, downside in the indices. We're in a bearish seasonal influence, like I said on Sunday. So all of that is justifying the interest for this to want to then look to maybe try to target the lows down here. If you see, I have a couple of new annotations. This one's not new. We've had this new week open, or this regular trading hours gap from May 8th. We've had that up for the last 2 weeks. We used it here, and then now we've also used it as a draw here. But beyond that, we could see there's a failure swing in here. So that's low resistance. This right here may be what ICT calls an algorithmic rebalance. We have buy side, sell side, stop run, break down below this low. These down candles should be treated as a bearish breaker. Okay. But then also these up candles is an order block too. So as long as this stays intact, we'll continue to see price continue to drop, especially with the overall higher time frame change in state of delivery we have here. If you look over here too, we have the dollar moving higher. We have relative equal highs above this current high. If we go to the dollar itself, right, we could see this gap I had outlined, basically this entire area here from this candle's high up to this level. When we were down here, I said this is something that's very suspect. If we break this high, that's where we'll be headed. And clearly, once we broke that high, we ended up rapidly getting up to there. Why? Because this is inefficient, right? We had no buy side or sell side in this upper portion. We had sell side here, but that's just about it, right? So this little piece of price delivery that's left available now, as you could see, they offered buy side into that inefficient buy side area. We can now see that this is the inefficiency, but now they actually shot up a little deeper. So we really have just this that's available that doesn't have any real trading in that area. That is a liquidity void. Okay, so it's void of liquidity on either side. So they don't like that. They like to send price up into that. As you can see, it's been rapid. They are really magnetized to that inefficiency because price only has one of three things that it does at any given moment. It's either attacking liquidity, creating rebalancing or retrading to an imbalance, or it's in consolidation. It's in a range. Okay, and so when you can determine which one of those modes of operation price is in or modes of delivery it's in, most of the time you could determine based on highs and lows and other PD arrays what the draw on liquidity is. Okay, there's obviously more to it. That's just one element, but that's a big element. Right, where is the inefficient price delivery, and what mode are we in? Are we attacking a high because we're coming off of a gap that we just rebalanced, or did we just take a high or a low, and now are we looking for internal liquidity? Right, maybe it's a high like this, or maybe an inefficiency. right? So it's liquidity inefficiencies or consolidation. That's literally all it's doing. And liquidity is simply equal highs, equal lows, single highs, single lows. I have a list of liquidity that I call liquidity mapping that I give you guys every week. So that's in my private group. It's in my free group. It's just a generic list of important liquidity that price uses on a regular basis and things that I've seen price really attack over the last almost 7 years, repetitively, consistently, as both counterparty as well as overall target. So, yeah, in a nutshell, that's a big part what I just described in how we determine narrative, aside from intermarket relationships and some of the other advanced things. But that's why this was on my radar, right? This gap up here while we were down here, this was inefficient. Yes, all of this stuff looks like it's efficient. It's offering both sides, but that's inefficient. So no matter what's there, it could still reach up there if they wanted to do so. And they obviously decided to do so. So we do still have a little piece available. They took this stop here. So we're also above this, which is a monthly bullish reclaimed fair value gap. I scrub on over here. Go to the monthly chart. It's from Sunday. It's that fair value gap right there. It's a very well balanced. They traded multiple times in and out of this level, between the high extreme to that low extreme. So it's been kind of a mess, but it doesn't matter, right? We're still able to call where price is going to go intraday. Longer term, though, we'll see what happens. It's got to get out of this range. So there's a lot of things that are attacking the dollar, obviously, over the last couple of years. As a result, right, we can see the indecisiveness. But yeah, we'll see what happens. So I'm keeping this on my radar. The only way I'll look for this to go bearish and reliably bearish is if the yields start to attack the sell side aggressively. That's this market. And the bonds look to go higher. But again, that's not in the cards for us right now, at least with what we see on the chart. So I'm going to just assume because we're above this, that we're looking to rebalance this inefficiency or this liquidity void, which, it's a kind of inefficiency. Looking at price here, we went lower to go higher. So I'm thinking market maker buy model. Now that we're above this level here, I don't want to see it break outside of this range. Preferably we stay in this upper 25%. So I'm going to keep that there. Price should continue to respect this. We also have a bullish breaker here. High, low, higher, high. So we should be able to stay above that. So my intention is to see if we could target the buy side up here. So what does that mean for the session today with the indices? I'm going to want to see price go lower. Go lower to where? Well, these regular trading hours gaps, right? Those levels are potentially going to be magnetized. We have a breaker here that's bearish. We have an order block as well, these consecutive up candles. We're inside this range as well. We're below the lower 25% of this low to that high. So I think that we'll continue to respect that plus this breaker. I'd really not like to see it come all the way up here. If it does do that, we might be in consolidation and we'd have to wait for more information. We have a daily fair value gap that we're also below. And like I mentioned a second ago, we have a change in state of delivery here. We have a respect to this breaker. So low, high, lower, low. It's also consecutive up candles, which makes a bearish order block. And the wicks here are very telling. This wick respected it up to the midpoint. This wick has respected the previous day's wick in the lower 25%, and we've displaced. So again, this is a failure swing, so that's low resistance. So I think we'll have really no issue getting down into that come the open price at 6:30 in a half hour or 7 a.m., which is the news event. They may hang this around, build liquidity. Maybe they jump below this, come back up in the range. But nonetheless, my trades are going to be aimed at seeing if we can't fulfill this today and really look to take that out. So if we actually go get a projection from here, I want to kind of see what that leads us to. So yeah, hopefully everything makes sense. Right? I got straight to the point this morning. Hopefully you guys could see how fast you could determine bias and narrative with the tactics I teach. Because this is literally how fast we could determine bias and narrative, less than 20 minutes. you know, if things change, obviously we'll see what happens. But for the most part, hopefully everything has made sense to you guys. Throw one in the chat if everything makes sense. But that's going to be the overall direction. And you can see this projection that I just told you guys I want to look at lines up perfectly with my draw on liquidity, which is down there. Okay, perfect. Maddie, good morning. Hopefully you guys have had a good week so far. It's definitely been a pretty interesting week, huh? We did get above that open price, so I think that, you know, this will still be my line in the sand. Actually, my line in the sand is actually going to be this wick right here. So yeah, if it was to get beyond that, that'll obviously upset the overall idea. If this low doesn't get taken and we were to end up above this high, I'd use this up candle here as a mitigation block. I'd use this high to that low being broken above as a breaker inside of a mitigation block. What's a mitigation block, right? Low, high, failure swing that breaks the high. Okay, that's also part of the type 2 dealing range idea that we teach. I just talked about EU a second ago and GU. I do still think that we're in a market maker sell model. Nothing's changed from Sunday. The narrative is still the same. The overall like higher time frame direction doesn't change day to day. So unless something happens on this, you know, super high time frame, like I mentioned, this is my invalidation, right? This level, if it overtakes this fair value gap, that's when I'll look to be bullish. But for now, because of the yields being aggressive bullish, bonds being aggressive bearish, that is not going to allow these to rally. It's going to allow the dollar to rally, but it's not going to allow this or the indices to rally if it's a healthy market environment. So that's what I believe is going to go down for this. I think that we're still in this market maker sell model. Like I said, nothing's changed. So we just actually created this order block, right? We got a suspension block. What is a suspension block? It's volume imbalance, displacement with a volume imbalance. So we're staying below that midpoint. So we have a high, low, failure swing, mitigation block low here. We also have this large wick. And again, that's all nested inside this as well, this suspension block. So I do believe that as long as we stay below the suspension block midpoint, we'll keep going lower. And you have relative equal lows here. You have a daily low here. And you also have that daily low here if you want to get really, really recent or close to what's like super near term. I'd say it's that plus the overnight. Oh, wait. Is that overnight low? It's more previous days low. You got relative equal lows there, so that's really obvious. We got stop rate here, so that's counterparty liquidity nested inside that midpoint of the daily suspension block. And you have displacement. You also have a low, high, lower low. That's a breaker. It's been respected. So we really shouldn't see this high get taken. Don't want to see this fair value gap get taken here. But if I was trading EU, I'd be looking for these equal lows to be taken. And then, like I said, the near-term low, the hell, where'd it go? Near-term low being there. That's another pool of liquidity. Very close. But overall, the major draw is coming down here. This is a high resistance area of liquidity because it's consolidated. So, you know, it does run the risk of this trading into that slightly, maybe even to the 50%. Then price may stall out doing what ICT calls deferred liquidity, which is when price trades into a high resistance level. Many times it's not going to have a straight shot through. Many times it's going to tag that high resistance level, set a low, come back, seek a short-term high, take out that short-term high, get people thinking that, you know, it's strong support down here. Use that short-term high as counterparty liquidity. So something like this, right? It would go like this, hit a midpoint or something of this range, or the upper 75%, or a order block, which is what this is, these down candles. These two, but then it'll have a short-term high up here, come up, take that, fake people out, make them think that, oh, we've shifted now. But then it creates a market maker sell model to then target this. It also would leave a failure swing, which creates low resistance out of high resistance. And then it's off to the races, completing the larger market maker model that we're trading in. Okay, so that is what's called deferred liquidity. We have to obviously merge a couple things together, though, like understanding high resistance and low resistance, what those signatures look like. We do have an order block here, so we'd have to see if it trades into that, right? Say it breaks the low. It's okay if it wants to trade into that. Maybe it sets a high, then takes that high, then goes. That's another way that deferred liquidity can manifest. Again, this is seen pretty much exclusively when you're trading into high resistance. That's either a consolidation, an opposing PD array, right? If price is going higher, well, no, if it's going lower, that's a bullish PD array. So if it's going into a bullish PD array and you're bearish, that's a opposing PD array. So when price is bearish trading into bullish PD arrays, that's a level that can be high resistance. Or if you have a simple situation like this, that's high resistance. This is a failure swing, which is low resistance. So there's a couple of signatures or areas in price that you can expect high resistance and low resistance. And of course, you also add consolidation on that list too. Okay. So hopefully that makes sense. Those are my thoughts. I think this is just a retracement. If you take this high to that low, this is optimal trade entry. And again, nothing's changed. Have we seen 3 PD arrays get violated on the daily chart or any other higher time frame perspective? I would say no. So 3 PD arrays being violated is one of the easiest ways to know that prices now went from one side to the next. And our third PD array is going to have to be up here, right? Because we have this as a bearish breaker. We have this as a fair value gap. I mean, we do have a volume imbalance in there. So I would say that this here, if that high on this fair value gap gets violated, that's enough for me to then believe that we are going into market maker buy model. Otherwise, we're still in a sell model, right? We're still respecting this accumulation level from previous. Like I said, that's an inverted balanced price range. It was used as a BPR going higher, but then once it gets traded through, when it trades back into it, if it stays below the 50%, but the last line of defense is the upper level, as long as those things stay intact, price is going to then invert. Once it breaks through those levels, that's what we're looking for. We see that this is simply a daily fair value gap. Okay. I'm going to keep this intact so we have our graded price swing. So equilibrium, we're hanging around equilibrium, right? You guys know if you've been with me for a while. That's another area in price that can present you with high resistance. It's not every time, right? But it hangs around equilibrium a lot when it meets that on the higher time frame. So this retracement, once we get below this candle here, that could be an early indication that we're having a change in state. Once we get down below this fair value gap here or invert this fair value gap, it's going to be off to the races. So maybe you want to wait for that. Let today show you whether it wants to get down there or not, because we are at equilibrium. And if it gets down there either today or tomorrow, once it breaches that, that's a balanced price range, inverted fair value gap off of an optimal trade entry delivery. Just simply dragging price up off this opposing PD array, right? Which is a bullish order block, opposing PD array to the downtrend. Because if it's bullish, it should hit this and go higher and keep going higher. We do have equal highs up here as well. So if it takes this, that's what we would look for. But we're coming off SMT, harsh decline, yields going higher, bonds going lower, indices going lower, dollar going higher. Everything is promoting downside delivery, from technicals to intermarket relationships. Also, the fundamentals being seasonality in the time of year we're in. Sell-in may go away. So you could see where clarity is placed in this analysis and how we arrive at it. And again, I gave you the invalidation levels as well. So Gogu, hopefully that makes sense. Hopefully all of this stuff makes sense to all of you. This is all the same. If this was a Nasdaq chart and it wasn't the pound or euro, if the chart looked like this, we'd be looking for the same stuff as we always do. So like I said in this, my intention is to try to see if we can get this to go lower here. And I think we're going to get that. It looks like I'm correct. So we're going to stick to that, right? So hopefully everything makes sense. You guys got any questions? Just let me know in the chat. If everything makes sense, just throw one in the chat so I know where everyone's at. So you see that we got consolidation, we got buy side, sell side, we got stop run here. Okay, there's buy side, sell side, that's a balanced price range. This is a market maker sell model. If it's going to keep going bearish, we should not end up exploring these upper levels. We also have the daily wick right here. I think we kind of got the point with this one here. So now we can actually go off of this wick here. What the hell? Okay. So that's that daily FVG low. I'll just put it right there. It's close enough. So we're below an FVG on the daily chart. I think this is going to smash. I think we're going to crush it to the downside right here. We are just now getting outside of the overall macro. We have accumulation here, manipulation, distribution, getting rebalance in here. So it should be able to just tag this in low resistance fashion, I think. The only issue is we're very close to the open price. I think we're getting ready to go down there. We've done a lot of work, so I think that we really should have not much of an issue. Buy side, sell side, this is a balanced price range. And like I said, there's lots of building blocks that got us to this point to then look to try to target that low. So that is what we're going to do. Oh my God, why does it keep doing that? So yeah, I'm going to let this one go simply because it is the open price and, I have rules and I'm disciplined and I'm not going to break my rules just because, there's an opportunity there. It's not my opportunity, but I think it could get down below this. But, you're either going to follow rules and live by that or not follow rules and be inconsistent and not be able to trust yourself. So So we'll see. But just because that's what I'm doing doesn't mean it has to be what you're doing, right? I'm just giving you my advice, right? Let me see, 3 hours accumulation. We may have some fireworks. No, I think we're going to have fireworks, Mike. Appreciate you hopping on, brother. Good morning, Fotis, if I didn't tell you good morning. See, I think this should be able to get us down below that. We have an order block here. If it gets below that, that'll be another change in state. So yeah, we'll see what happens. What the hell? Where's it at? Oh. So yeah, we're below this daily fair value gap. So yeah, it looks really, really good. We're above the 4-hour open price too. You see it's accumulated, manipulated, spent some time up there, basically accumulated at that daily fair value gap upper portion. This is also a breaker, like I said, so this is a very good setup. Only issue is timing is out of alignment. It's too close to the open. Does it mean it won't deliver? Of course not. Right? It could do delivery. It does it quite a bit, but you know, I'd rather, for me personally, wait. We got this low to that high. Once it breaks that low, that's another breaker. We have accumulation, manipulation up above the open price for the 4-hour. See the 1-hour right here? This current 1-hour candle, it's respecting that wick. And the previous 4-hour candle, it's respecting this large upper wick and the lower one. Got a bunch of dog hair on me. Sheesh. So yeah, the first call out this morning, it's not something I'm taking a trade on, but we just hit the target almost. Let's see if it can get through that. See, the problem with it being before the open price is they can do a lot of fake outs. They could then potentially shoot a wick through early sellers and then continue to be correct because the narrative is on point. Think about what we've achieved here. If this ends up going down to these targets, we've been able to outline when price was going to reverse in a very massive buy side trend. Okay, and that right there was beautiful. That was beautiful. Beautiful. Low resistance. Told you. I told you. Now we'll see if I'm a little salty as this unfolds. We'll see. We'll see. But that was beautiful right there. Just as we outlined. But that right there, you see? That's the risk when you take a trade pre-market open. If you took a trade in here, once it accelerated through that low, right, that first target's met, I think it went over 60 points right there. Yeah, almost 100 points. That right there is enough for you to be done for the day. Hopefully it makes sense why this was able to deliver. I mean, I gave you guys such a detailed explanation as far as why I thought this would end up going lower, why it's able to be trusted in this environment right here. So if you did think, or if this was in line with something you're comfortable with, maybe you're not as aggressive when it comes to saving your engagements for after 6:30. I'm very aggressive with that. It really depends. If there's like a news at 5:30 a.m. Pacific Standard Time, like an hour before the open, I'm a little more lenient. But when there's no news at all, and it's at 7:00 a.m. Pacific Standard Time, and not even at 6:30 a.m. Pacific Standard Time, I'm very, very strict, because a lot of times, like I mentioned a second ago, it could shoot through early liquidity, get everyone pulled in thinking it's going to go short right away, and then it could whip up and snap their neck up here, and then at a breakneck speed it could just get back in line with the narrative. So that's always the risk that's there. There's always risk in the market anyway, so you just have to determine what risks you're willing to take. So yeah. So yeah, we'll see what happens here. Right? We have sell side, buy side, sell side. It's now below the low. We may look to hang around some of this in here. If we measure this out, let's get a fair value read. So midpoint. Then the midpoint lines up with the bearish breaker I have outlined here. This red line here is part of the daily wick I just outlined. So PD arrays that are overlapping with a daily wick on these lower time frames, they are highly sensitive and highly reliable too. So this right here is going to be an order block. Go to the 3 minute. It's a 3 minute order block. So once we get below this order block, it should be pretty reliable. Piece of price delivery here, that's an order block too. So we're respecting the midpoint. Is price screaming that it's going to go higher right now? No. Should you be worried about it going higher? No. Unless it was to just displace and get through the midpoint of this range, that would end up being suspect. But right now it's typical retracement. Nothing really too exciting in here except the fact that that was a move. But now that we're 5 minutes before the open, I would absolutely not be looking to take a trade. Unless you want to get beat up and then be correct later on. That's up to you. Because most of the time that's going to happen. So yeah, it's continuing to go. Right, this whole idea from this fair value gap, this bearish breaker, low, high, lower, low, this accumulation, manipulation, distribution, rebalance, redistribution, right? Nothing has upset this right now. This on this 1 minute chart, this little high in here can be looked at as a 1 minute intermediate term high. We have a lower high to the left, lower high to the right, inside of a fair value gap. So this should hold. We should not go up there relative to this time frame's perspective if price is going to keep going lower. And it looks like it's going to continue. So yeah, this order block should be pretty reliable. I mean, we may, because this is low resistance liquidity down here, and we're obviously in a hurry to get down there, and we have so many supportive factors behind us, seasonality, intermarket relationships, clear draw on liquidity, being those relative equal lows. this 630 might be one of those times where it just absolutely rips to go and take that out, because there's a lot of stops down there. We already took one level. Now we're going to potentially take that secondary level. We may get a big run down there quickly. We have this gap in here. We have this more significant low, even more liquidity. So again, this order block, because it's overlapped with that daily wick level, watch and see how aggressive this thing is going to hold. Generally, the rule of thumb is when there's a PD array overlap with a wick level on the daily chart, the daily wicks, they are highly sensitive. So we'll see what it does here. Again, the issue is we're so close to the open, so it could do a lot of sporadic, unorthodox things. So that's why I wouldn't really want to execute in this. But this one was okay. So right now we're going to be in a mode of waiting. Coming off the heels of, what we've outlined so far, which has been pretty much perfect. What's up, Fancy? Yeah, no worries, Fotis. Yeah, yesterday's low. Mm-hmm. Damn right. That low right there. There are so many fish in the pond. Yeah, this is the watering hole right there, right? Like ICT says. If second stage, we should expect straight run down. Yeah. Yeah. That's why the second stage distribution is ICT's favorite model that he's taught publicly. It's very easy to catch those moves. If you think about market maker models right here, come down to this seconds chart. Got accumulation right there. Once it breaks through accumulation, it should respect it aggressively. We got second stage. Well, yeah, pretty much an unfulfilled second stage in here. Price came back up, and then we rapidly got down there. Breaker, this low, high, lower low, that was a move right there. But again, you see why. See why I say it's not the best idea to try to get in line with a trade too close to the open. I wouldn't be surprised if they wick this up and then we get back down. This is a larger liquidity pool down here. Unless for whatever reason they're going to wait. There's not really anything too big, but the announcement that the war is on pause, this right here, this may cause some certainty in the market still, and that may be positive for the price delivery. We're still reluctant to really get through this aggressively. So again, we're in a mode of waiting. We have a Kraken correlation here, pretty big. The Dow's just tanking. So let's go down to some. Oh. Yeah, it's giving a little bit of a test up here. Again, we'll see what happens. We'll see what it wants to do. First target was met. So we'll see if it wants to continue with that narrative being bearish. Got this 2-hour chart. It's just simply going into the order block one more time. Now, if it gets beyond the midpoint of this order block here, like beyond this candle, basically turning off this bearish breaker, which honestly, the bearish breaker's there. So once it does that, if it was to get beyond this, we'd have to obviously wait, because price is now pulling back inside that consolidation. Damn, that was a huge run. I didn't even realize that. Holy crap. Yeah, well, this is what happens with pre-market, right? So yeah, we'll see what happens here. Got the midpoint of that regular trading hours gap. We're pulling back inside that consolidation, so I don't necessarily like that. This is technically consolidation. So we'll see, right? We'll see what happens. That is very aggressive. Look at the nasty Kraken correlation. This is low resistance or low probability conditions right now. You don't want to get chopped up, but can you find setups? Of course, right? We literally just showed it. A 70+ point move called before the fact. Just wasn't something I was willing to participate in because timing. And this right here is the exact reason why. This could have done this. Right, this could have delivered lower, failed to break the low, and then opened up, took the low, and then immediately ran against you. Right? So this right here is a testament to the rules, right? But like you guys saw earlier, right, we called this move out, right? This move right here. Okay. But it's high risk. So now we're in a mode of waiting. We could see that that created a breaker instead, right? Came back down into that, and then immediately we're basically rebalancing the whole entire regular trading hours gap. We're really contesting that low. It's very reluctant because the overall narrative clearly has not fully changed to overall bearish. The seasonal influence has definitely had a very deep influence. So that's why right from the start of May, or well, it's mid-May now, but we ran up, took the stops, used it as counterparty, and now look to come and contest some of that. Just because this has such a huge run like this, I'm not fully convinced that it's going to continue to go higher. We got to continue to break larger levels. We did break through all of this, so you know, once it gets above this up here, we have to then adjust and then look at this. And we'll just look at this as a market maker buy model. But I have no real issue in waiting. Now that we saw price do this, this is not what we want to see. But you know, that's the market environment. You got to be able to be flexible. So yeah, we do have buy side being delivered here relative to this regular trading hours interest. If this continues to just tank aggressively on these other two, it's going to influence this, and this will have just basically been a retracement. It looks a lot more convincing on that 1 minute chart that it's going to go higher than it does on this 1 hour chart. The problem with that is if you focus on just the 1 minute chart, the lower time frame, a 1 hour retracement can look like a bullish trend. And so you'll be trying to buy because the 1 minute tells you that that might be the case, when in reality, we're just trading up into a premium on that 1 hour or on the daily chart, just to revisit those levels to stop out early, in this case, sellers, to then simply go short again, right, as it looks for the larger objective. So, yeah. Damn, that's real aggressive, huh? That's a big candle. See, I'm not interested in touching this given the all over the place vibe going on. This is not a trustworthy rally. This is a suspect rally. We have basically got through this breaker here. Low, high, lower, low. So that right there can be now adjusted. I think I will use this level here. We'll encapsulate the little accumulation here. This high to that low, right now that we're above this, you know, it runs the risk of this high becoming part of a market maker buy model, a short-term market maker buy model. We are inside consolidation as well. So it's not necessarily overwhelmingly favoring buy side or sell side now because we're coming back into the range. So we're, again, that puts us in a mode of waiting. That was a spectacular rally higher. Sheesh. Very suspect. Hard to trust this when everything is everywhere, right? Like everything is declining. We did fulfill this buy side liquidity on the yields. That may trigger in a rejection. Same thing here, right? We finally blew through this now. So that objective has been met. So because it took out a higher time frame level, every time it hits a higher time frame level, you got to watch for retracement. Doesn't mean full reversal, but when large levels like this get taken or large PD arrays get tagged into, the probability of price pulling against what just happened becomes pretty likely, because what are they doing? They're triggering in stops and they want to pull it back so they can take people out that have sell stop orders. Basically orders down there where when price hits that level, it'll trigger them in, plus stop losses from anyone that was part of the buy up here, right? So they take it, run back a little bit, reach for internal after external was taken, because that's what this is, external. They then seek internal before they look to continue. Not always, right? Sometimes they hit it and then just keep going. But it's a good rule of thumb when you tag a significant level like that, that you be cautious, right? You anticipate or watch for something like this to maybe happen before it looks to continue. Right? This isn't the first time that this has taken place like this and then continue to roll over, right? We did it here. When it took lows, it rallied up. Took lows again, rallied up. Deep retracement. So seeing how prices in consolidation, seeing how we have a cracking correlation, seeing how we're inside of consolidation, and every time a low gets taken out, we're getting deep retracements. This puts you in low probability conditions, very high resistance. Now, obviously, there can be an argument. This was pretty low resistance, right? But we're just kind of bouncing around the range. All of this buy-side delivery from the lens of a regular trading hours gap, we only have buy-side delivery. So it's still inefficient to the sell side. So if all of this turns into just a rally up, maybe to come and swipe this real quick, it's overnight highs. Maybe they come to tag that real quick and then we start a rapid decline again. Say we get this, but on the opposite end, so it goes lower aggressively. Given that the higher time frame looks like it still might want to go lower, we are below this daily fair value gap. We have broken through a change in state of delivery, like I mentioned earlier. We have bearish seasonal influence. This is inefficient to the sell side. So it could be rapid buy side to come purge liquidity, then rapid sell side to go and create efficiency as it looks to then target that larger potential objective, which is the failure swing down here. So yeah, this is definitely a bullish order block as well. So that's in part, why it's potentially having a hard time getting through that. Then you add on the headlines like this. This is a positive thing. When war's not taking place, generally it's good for, I guess you could say, stability, I guess. But yeah, I wouldn't really be surprised if this huge run was a suspect rally, like I labeled it earlier, for us to then see price continue to drop. Look at that. On this 1 hour chart, this may be a wick, right? Go to the 4 hour chart. We're just simply wicking into the consecutive up candles here. Lots of wicky behavior, right? Lots of sideways, very slow, large ranges, but, very back and forth. So it's really working liquidity to then get down to this level, it seems. But again, if we break levels like this from this 4 hour perspective, say we get above this midpoint of this order block, that's how we know that we'll be back in line with a potential run back to the buy side. We do have a high, low, higher high here, so we got to be paying close attention to this. It could end up becoming a bullish breaker to take out London's high. I'm preferably going to be on the side of this all being fake and then us coming down to take the lows out. Because, this is not telling us it wants to go higher on any of the other assets. And we got failure swing, right? Easy targets down here to look at. So I'm going to stick to the higher time frame narrative. I don't care what the 1 minute tells us. I do, right? But not more so than what's on that higher time frame, because that's where the narrative's at, right? You may catch yourself taking trades and losing, but you're correct overall on the narrative. And most of the time it's because of stuff like this. What I'd be paying attention to here, what I am paying attention to, is how this behaves, because this may be first stage distribution, right? Once we get down below this, this may end up being second stage. Okay. That may set us up with a market maker sell model. We have buy side, sell side delivery. This should be balanced. We took liquidity. Very obvious equal highs up there. Right? It makes sense for them to have pulled this up, given they left these equal highs like that. But this is what happens with pre-market open, though, right? It looks like it's gonna go, maybe it's gonna leave it. But because it was pre-market, right, it runs the risk of this happening. You may be correct overall in the day. It may end up getting down here, which is what I'd like to see. But because some traders hold through this thinking that the start of the move, like the main portion of the move, is going to begin because they see a fast move in pre-market and they think they're going to miss something, you get taken advantage of like this. And that's not fun. And we've all been there. So we're going to keep tabs on this. We'll see how this behaves. If it's going to be bearish and trustworthy still, we're going to know that for a fact by how it respects this candle, because that's a distribution. So it should be pretty rapid. We're going into the macro too. Ironically, this is setting up around the macro time. So we may get this because we still got low resistance down here. So this may look to really, really amplify getting us down below those lows there, which is what I'd like to see. So yeah, we should not revisit up here if it's going to keep going lower. We got an order block here. Should be able to be respected. So we'll see what it wants to do. Ay. So yeah, let's see what it wants to do with this. Again, I'm banking on this continuing to want to be bearish because the higher time frame is still bearish. So we'll see what happens though. It looks kind of it's kind of wonky right now. Got the currency still looking like they want to go lower, dollar wanting to go higher. So that's supportive of our idea. And we'll see if it wants to keep pushing. Looks like it is. So yeah, dollar's still going higher. Very reluctant to get down there. That's for sure. So yeah, pretty aggressive rejection here. So if it gets above this, it may look to try to get further into London's high. But that's a line in the sand right there. A very wonky, unworthy price delivery to put risk behind. So we'll see what it wants to do. Nothing worthwhile at the moment. I would need this to get down below this candle here if I'm going to look to even engage. And it's going to have to stay below this. We cannot be breaking above this here. We already took stops. If it breaks through this again, that means we're going to get to another level of buy side. So yeah, now we're getting above. So very wild, right? Back and forth. So got this fair value gap here. Again, if this closes below this again, that'd be nice. But so far, it's really reluctant. We're just in consolidation type of behavior. So we'll see what it wants to do. There's nothing in here to engage yet. Yeah, I still do believe, I don't care, I don't really care that it went this deep. I do believe these are going to be targeted. So yeah, we got news at 7 a.m. So it may be waiting for that. That may be what it waits for. So yeah, we created a rejection block here. So it should be able to respect that if it's going to go lower. It's a nice low reaction there. We'll see though, we're really close to this news event. So again, it may just be holding it for that news event. So that's what I'm going to be banking on. See, liquidity hunters. Yeah, Phil is definitely in the building. Bears take a nice move. Government bonds. Yeah, we'll see what happens in here. We're definitely flirting around with that midpoint of the regular trading hours gap. Right in there. It's definitely hanging around. Beautiful opportunity to blow your accounts. So yeah, we're in the macro, so some fireworks should take off. We'll see what it wants to do. I'm not sure if they want to take the London high first. I'd prefer that they don't, because we have a lot of levels up here that should be able to hold it. Change in state right there too, so it's really responded well to these upper levels. But the news event could come out, it could wick through, and then that could be what the business is. So we'll wait for the news. Very slow start to things this morning. Oof, rapid move in the Dow. Everything seems to be recovering now after they just tanked. So yeah, definitely something to watch here. I'm not interested in buying right now. So it's kind of like we're in the middle of the range. There's really not much to really participate in. I mean, you could try having the perspective of thinking, okay, well, we broke above here. Dollar's not necessarily showing us that it's heavily bearish. We did just take out the high up there. We do have a little bit of the gap still available. Is there SMT at the lows? Not really. Yeah, the Dow got these equal highs up there. So that's the London high for Dow. So if Dow gets above this, it'll shoot up there. Yeah, the Kraken correlation is definitely something this morning. This order block here, if it gets above that, it should shift us up to the London high. Shorts are not on the table just yet. It needs to do more for us to believe it's going to go short. But again, this is why we're going to wait. We're in the middle of the range. It's not really doing much. So we'll wait for the news, see what the news wants to do, and then we'll make a decision off that. So yeah, we got this wick in here, fair value gap. We have a low, high. If it breaks this low, that'll create a bearish breaker continuation. But it's really slow, gradual increase, it seems. It's really taking time to balance out this regular trading hours. It did leave a piece of it available up there, which I would have preferred it filled it completely, because that runs the risk of it trying to get back up there and then take the London high. Yeah, bullish and bearish SMT. It's all over the place. Like I said, there's low resistance down to the sell side. Dollar's still bullish. It could rip down there after taking so long to make you second guess. But that's why it's very important to stay on the side of the higher time frame. That's why we're focused there. And that's not going to change. We're going to stick to it. So you got an order block here. Let's see how that respects. It's at the midpoint of the regular trading hours. Again, because the news is there, we got to wait. We got to wait for the news. If it breaks down below this, this creates a mitigation block. So that'll be something. Right? If we do end up seeing this displace through it, come back into it, I'd be interested in something like that when it comes to going short. And then the target would be right down in there. Took another 100 points. That gets us down below this low. But again, it's very reluctant. It's more reluctant than I thought it would be this morning. I mean, look at what price is doing. It's nasty. We're still in that lower half of this low to that high. That's a market maker sell model. So we're still in that lower half. Now we're getting deeper into that lower half. Ran up one more time, stopped out anyone that was successful in this short up here. And this red line here is the low of the daily fair value gap too. So this mitigation block I just outlined is inside that daily fair value gap low. So I'm very curious to see what it wants to do there. Dollar is kind of sideways. You see that? It's very nasty in here. So yeah, we'll see what happens with this order block. Fair value gap, low of the daily fair value gap. It's very nasty across the board with these indices. Ugh. Look at it. So we'll see if anything reliable can happen after this news event comes out in a minute. My whole idea is it's going to get down below here. I'm still going to rest on that. This daily fair value gap being inverted, it's now an inverted fair value gap until it gets beyond, right, through to the upside. So yeah, let's see what price wants to do here. I think it should, if it's going to go down there, it's going to open up here. Should give us a silver bullet. Maybe it offers a fair value gap in there. Yeah, we should open up here if it's going to go. Time is now in alignment. I think dollars starting to pick up. Not really. It's got lots of trend line liquidity there. It's got its own regular trading hours gap. But yeah, we'll see. I'm more so on the side of this going lower here. Should stay below this. Again, this is kissing the low of that daily fair value gap that's inverted. So it should be dynamic away from a level like that. So yeah, we'll see if we can get it. It's very much lethargic though. There's nothing to do at the moment. If we can get down to here, that'd be great. Because then we can look for a retracement into that. And then see if price can't accelerate. Otherwise, we may just be stuck in this range. I have a feeling the follow through is going to be a problem today. It's based on what we've seen so far. I have a feeling that it's going to make you fight to get through levels like this. But it's low resistance, so I'd like to see it slide on through there. We'll see if that's what we can get. We've got the 3 indices now getting in line. I don't like these equal highs on the Dow. It's very suspect. It would have definitely been better if they left this low available. But again, we have a larger perspective that's left available. So we'll see if we want to gravitate down there. We're getting into that lower portion of the regular trading hours gap. So I don't like that they left this little piece available. It's going to be nagging at me that they left that open. We're getting a wick in here. And we kind of kissed that low right there. Yeah. I need to see it get through it aggressively. Oh shit, whoops. How to be patient in this environment, knowing the target's below, develop patience in your hands, and which signature. And what signature or price would you be looking for? I just simply wanted to get down below this aggressively. Like that. Now we should not see this high get taken out. It should rip. Of course, we don't like this. That's not necessarily the greatest thing to see. The correlation, it's definitely a harder to trade day today. But that right there was enough. That was a great displacement through that low. It's very confidence boosting. And it's simply just trusting the higher time frame narrative. And then just waiting for, whatever your model is to unfold. So we're watching this down here. Like I said, a return into that. It's an immediate rebalance, it looks like. So we'll see. Again, we'll see if the follow through can take place, right? Plus, we're in the macro too. It's part of what we were kind of waiting for. It's talking about how this needs to hold to. This was definitely a line in the sand, but it still respected this, spent a little bit of time there, and then quickly got back below. This level here, right? This right here is the main focus. Because you see all the wicks in here, the bodies, everything's respecting these levels. So it's still interested in going lower. Dollar has not, overwhelmingly looked like it's committed to going lower. So it's still got some room to go up. Yields are still going up. The fact that they took these highs, though, could trigger in a rejection response. And that could send reverberations. But the Nasdaq is still not at its level yet that I think it has a likelihood of getting to. So yeah, that was a beautiful move there. Right there is a beautiful idea based on what I called out. I said, if we can break down through that aggressively and then return into it, that's an idea. So if you guys were paying attention, if you guys trusted what I was saying, that right there was your idea. it's the signal, if you will, aside from the one that I gave earlier on the Nasdaq that I said I wasn't going to trade, but you know. Worked out pretty flawlessly too. 70 points. This is another 100 plus points. So overall, the two ideas that I mentioned have ran over 170 points today, right? The first one was the short in here. And then, of course, the second one was right here. Okay, so 100 plus points there. And then this one, which was about 70 points. And in this, if I would, if you're going to execute this, you put your stop above the order block. It's very, very slow, very reluctant to want to get down there. Yeah, now we got this low, high, lower low. So we may actually be seeing now the larger layer, right? The larger idea potentially from a time frame above. Accumulation, manipulation, possible distribution now. Now we're getting rebalance. So we should be able to get this 5-minute redistribution. Staying below. Good morning, Jen. Hopefully you were able to be here when we were calling out the move. Again, we're seeing pretty high resistance for whatever reason. Yeah. We have to break through the midpoint of this wick on that 1-minute chart here. Otherwise, I'll just take it. See if we can get one more punch lower. It's going to have to get on this candle or the next below this midpoint of this wick and close below it. So that'd be a risk-free trade. Honestly, it's best to probably just take it off. I want to see if we can't get to my main full target down there. It may not offer it. Maybe continue high resistance because for whatever reason, we have a lot of reluctance to give us these quick displacements. So the follow through is definitely suspect right now, especially with all of the other ones playing games. The S&P is doing well, so that makes me feel like the Nasdaq should carry over that downside weight. But the Kraken correlation is definitely a problem. Dollar's still going higher. So we should be able to get this follow through. Simply to this low. Right, that's all we're looking for is down to this low. That black line right there. And that'll be it. No, that'll be it for me for today. I mean, this is enough. The 2 trades I called out today is already enough. There's really not much more we need to do. Already bagged over 180 points at this point. If I was to close right here. Well, right there. This candle needs to close below this. If it dances around, I'm not interested in holding through consolidation like that. Okay, let's go, baby. Let's go. Okay, now it needs to stay below that. There she goes. There she goes. And that right there is cool for me. Whew, what a beautiful day. Holy crap, dude. Banger. Sheesh. Anyone that didn't stick around, y'all are idiots. I swear to God. Like, oh, man. I mean, let's be honest, yo. How many times this got to happen for you to pay attention? Like, what an incredible morning. What an incredible year. Like, we've done some insane stuff this year. Crazy. Not just me, though. My students, too. Shout out Harley. Absolutely crushing it. Making thousands of dollars. It's incredible. It really is. Yeah, people with those tiny little baby, itty bitty little things, little perspectives, right? Like, oh, I need 5 minutes. Like, give me a buy and sell, please. Well, when I do, they're not here to pay attention. Then they show up and they're like, oh, I need a signal. Okay, I'm going to leave. 5 minutes later, we call it a 100-point move. Or in an instance like today, back to back, almost 100 plus points. One was about 70, 80 if you held. But this one was absolutely insane. Insane. Absolutely insane. Wait, let me see. Saw a comment, Jen. 28,246. Honestly, I mean, that's pretty damn far. I don't think they're going to get down there today. But I wouldn't be surprised if they get down there. That puts you inside that fair value gap. The one that I would have you look at first and foremost is going to be this low. That's at 28,550. That looks more reasonable for today, potentially, if it wants to keep going. But, yeah. Pretty much every single thing that we've talked about today worked out. I bet you that every live streamer that you probably know on YouTube that saw this thing run up like this were probably telling their people to get into buys. Did I say buy one time today? Nope. I said we got to watch. Once it gets above this, it shouldn't come back down below it because that would be a market maker buy model then. Okay? Did it respect that? No. Yeah, hey, if y'all ain't following Harley, you need to go follow Harley. Shout out Harley. Working on my stop and risk. A bit of 29, 28. 29, 028. Oh, did you execute up here? I'm assuming you executed up here. Maybe like right there. Yeah, but we've been trying to work that out for sure. Definitely for sure. I think that'd be really nice. I'm trying to get my 2 mentors that I've worked with outside of ICT. I'm trying to get them to hop on, but they're always so busy. They're very private too. They don't like being like very public and whatever. But I think they should. I really think they should. But you know, once you trade over time, like you get to a point where you're like, all right, well, I really don't need to do anything. And you know, some people just want to live their lives. You know, at some point, all of us get to that point because trading it gives you so much freedom. But then again, that freedom, it's like you get bored, right? You're like, I need to have something to do. Like, you know, you end up doing everything that you want to do. That's why a lot of the profitable students or profitable mentors, you know, that's why they have services. It's not because they have to have services to make money. Most of them are bored and they feel like they have a skill. And if they could monetize it, why not? You know, and at the same time, they can also help people. 28, 928. 28, 928. Nice. So you took the execution right in there, right at that breaker we talked about. Low, high, lower low. 28, 928 right there. Beautiful. Stop goes 928. Stop being up here is a little bit far, in my opinion. You don't really have to have it that far. Because if this breaker was to violate, you don't want to let it go all the way up there. Right? You already have buy side, sell side, shift. You have a shift, change in state. You have a breaker. Right? So entry in this level in here, stop really just has to go maybe to the rejection block high here if you wanted to be conservative. Up here is a little much. That's like 20 extra points that's kind of unnecessary. But of course, you know, that's just my opinion, right? If that makes you feel comfortable to have it up there and you're okay with the risk, maybe the stop is or the lot size is a little smaller to allocate for it. Again, there's nothing wrong with that, but just know that inside this, it's already got buy side, sell side, buy side again, 2 shifts, right? Shift here, here, a breaker, order block. This down candle is a breaker in itself. You got the fair value gap being respected. You got the low end of the daily fair value gap. Where the hell is it? Why is it? Oh, I deleted it. Yeah. So the order block on the day. Oh wait, no, it's right here. The fair value gap here on the daily chart is right there. So you're in that lower 25% of the daily fair value gap. So again, once you move away from that, especially being down here, you have that daily fair value gap level to be respected as well. So again, the stop up here is deeper inside that daily fair value gap, but you really don't have to. Once we get below it and we start pushing away, right, you could really just use the PD array that's at the lower end of this daily fair value gap. And then you could just you could have it, you know, conservative right here until you go, you know, 30 to 60 points. Once it's 30 to 60, you rush to break even, or you can move it up, you know, a little bit, you know, lower, have a little bit of risk exposed still. But once you get beyond 100 points, you're already at break even or damn near locking in 20 to 30 points. You know, and you could really just get out at 100 points, but, you know, over time, you're going to want to hold trades longer. My default is 20 to 30 points, but I mean, you guys seen today, you know, about 70 points here, 139 here. Let me double check. 131. So right there. So yeah, not bad at all. Yeah, 131. So 65-point run plus 131. That's over 200 points. Well, close to over 200 points. I think that's a good day, right? At 200 points, I mean, shoot. You don't got to expect to do that every day. All you need is 20 to 30 points, and you could succeed. But the better you guys get with this skill set, with what I teach you, 200 points is very small. Oh, yeah, Mike, I forgot. I was looking for it yesterday. I don't know where the hell it was at. I had it on my wall, and then I brought it down downstairs in my house. I don't know where the hell I put it yesterday. I need to find it. I'm not sure if... I don't know where the hell I put it. It's here somewhere. Okay. It's here somewhere. Don't tell Maddie, bro. Don't tell Maddie. I don't know where it's at. The other Maddie. He gave that one to me as a gift. I was like, what the heck? WMG hat. Yeah, I was planning on making them later on when I hit like 10,000 subscribers. I was going to have it as a perk when you join the private group, right? And you work with me one-on-one. I was going to end up mailing my students a bunch of little things as a thank you for the trust. Because you guys could be anywhere. Honestly, there's no reason to be anywhere when we're doing this every single week and in my private group every single day. You know what I mean? Unless, they prove it or they're a student of mine because then, they're worth it because they know what the hell they're talking about. But yeah, and you're welcome, Jen. Appreciate you sharing. Jen is a freaking savage, by the way. I just met Jen like maybe a month and a half ago. You're pretty savage, Jen. Okay. You gotta start doing what I told you when we first met. There's a lane for you to go and take over, and I think you would do very well. Look at Tanya Trades. Look at Lumi Trades. Right, some of these women that are just spectacular. I mean, those are the only ones that you could really think of. There's not really many that are very popular and that know what they're actually talking about. That are worthy. And you have a special situation. Like I told you. So I encourage you at some point when you feel comfortable, I'm here to help you with that too if you want. I don't have the biggest following, obviously, and I could do better at marketing and whatnot. Well, I guess distribution. It's kind of where the weak point's at. But hey, I got all the tools. I got all the tools that everybody uses, like to clip things up and how to set up live streams and do all that stuff. So I know some of the basics, right? I know some of the, the stuff to get you rocking and rolling. So yeah, definitely something I encourage you guys to do because the industry always needs more people that know what they're talking about. You know what I mean? So yeah. Let me see. Did I miss any questions, you guys? Okay. Yeah, I'm curious to see what Harley did. How much you want to bet? He did the same exact thing that we did. Great minds think alike, right? Or he might have caught the buy up here, ran that up, and then he may even caught both. Harley, he has a skill set good enough to trade both sides of the marketplace. He understands counter trend trading. We've talked about that a lot. He understands when price is going to be in line with the narrative. Once I mean, it's hard to get away from this stuff. And again, like I said earlier, we talked about market maker buy and sell models. Every single live call for the last pretty much since I started teaching publicly, I'm always using market maker models. But, more so now because I notice that people are discounting market maker models because there's a lot of shiny objects everywhere. But you really just need market maker models on the back end and on the front end, right? If you really want to go crazy. And this type of stuff is easy to do. Like this was fairly easy to see. Once it got below this, it was going to go lower. It was pretty easy to see that, this rally up, once it broke down, got close to the low here, set equal lows. Plus we had the low resistance liquidity, which again, full targets have been met that we called out from earlier. I mean, that's pretty easy. We determined what the narrative was in 20 minutes from me being on the live call. I mean, we decided right away and we didn't shift at all, even in the face of this. Because we looked at that 1 hour chart and it was not telling us that it was going to go higher. It was just a wick, right? If we go back to that 1 hour chart, all it was a wick. That wick closed down here below this fair value gap. So the next candle, which took us into 7 a.m., had a news event. And then it gave a tiny little wick, but it couldn't even get to the 25%. And then it broke down below this candle's low here, like the open price. That's a change in state. Bang. And it went all the way down to our main target, which was down here. And all the things that we talked about that put us in position to look for shorts. I mean, clearly what we're talking about makes sense, right? I mean, you see it, right? Did we go to the sell side like we said? I think so. So yeah, I think we've done enough today. Let me actually pull this up real quick. Let me pull this up real quick. Damn, wait a minute. That was a much bigger. That was more than I thought. It's not 130 points. Why the hell? 130 points. It was 169 points we captured. Holy crap. I didn't even realize that. Like, dude. Yeah, that's crazy. I didn't even realize it was that much. Jeez. Yeah, look, watch. Let me show you. Amp live account. Wait, what the hell? Whoops. Scrunch this up a little more. See, where was it at? 902. To 743. 168 points. That's massive. That's massive. And then you add on the fact that took this one earlier as well. This was on my funded account. Trade of 8. Whoops. Trade of 8. That one down to the low. Fair value gap. So yeah, close to, well, no. Yeah, we're well over 200 points at that point. It's because this was a 70-point run right here. 65. 65 plus 169. That's like 220, 250. I'm not that great with math. Above 200 points. Okay. Live in front of you guys before the fact. This one, I kind of made you guys go kind of away from it because, again, I want to keep you guys in a particular realm of execution. This was too nice. So I didn't want to encourage you guys to take trades pre-market open, but, you know, when you get experience, you know when to bend the rules. I'm trying to get you guys to stay inside of a certain realm of rules. Okay. You have to, right? At least at the beginning, because trading pre-market open requires you to have a certain level of understanding of the manipulation of the daily range. And if you're not aware of it, and say I send out a trade and I get out, but you decide to hold it because you think, oh, well, you know, it's probably going to keep going. Then price turns around and does what we looked at earlier, you know, going into the New York session, skyrockets above. So, you know, there's trades that I'll take that you won't be taking, that I won't encourage you to take. And there's good reason behind that. Okay. Because again, I'm not here to have me pass your funded accounts or me pay your bills. I'm not a financial advisor. I'm not here to do that. I'm here to teach you how you could go ahead and do it. Okay. And hopefully, with what we talked about today, what we talk about every week and in my private group every single day, you guys feel you are making progress to achieve that end. I feel like a lot of you guys are, from what you guys tell me. So, you know, 200 points I think is pretty nice. If you can go find all the live streamers that were able to hit 200 points live today, that'd be awesome, right? Let me know if there's any, but I highly doubt there's going to be many. There'll probably be a handful of them. Most of them, though, they probably got killed in this rally up, right? If they didn't get killed in the rally up, this convinced them to probably go higher, and they, you know, they had to eat it going short. And then they probably turned off their stream. You know, whatever the shenanigans is that they do. So, yeah, beautiful live call, over 200 points secured. We determined what we were going to try to do in less than 20 minutes, stuck to that narrative and didn't change it, stared this down down the barrel of going higher, talked about, you know, what it could do, what would lead us to continue to try to then seek, in this case, London's high. I would have had to see this get respected. This would have had to trade down into this, respected this, and then took this high. In that instance, I would have then tried to call out a buy. But it didn't do that. All it did was offer buy side, clear up some of the buy side inefficiency of the regular trading hours, give us accumulation, manipulation, and then distribution. Here again, those of you that are with me in my private group have been seeing the culmination of indicators that we've been creating. Accumulation, manipulation, distribution. Beautifully outlined by my indicator again. This is the fifth time, excuse me. It's the fifth time this has happened where my indicator outlines the accumulation, manipulation, distribution perfectly. Okay. So the suite of indicators that I'm building for my private group is absolutely ridiculous. So it's going to be a perk for those of you that join. If you do the month to month, it's going to require a 6-month membership of being in the private group before you get access to being able to have these. If you join me on a one-on-one basis as my one-on-one student, you get this right away. Okay, so at some point, everyone is going to have them once I finish launching them and, you know, making them sharpened, right? We have a ton of different indicators, well, handful. SMT indicator, 90-minute cycles, 4-hour open, a timing indicator there, and then we also have my Razor model indicator as well, which it's hitting right now above 65 to 71% across all time frames. I want to see if I can get it as close to 70% across all time frames, or at least the higher time frame bias time frames, like 1 hour and above, and then the execution time frames from 5 minutes and below, right? maybe 15-minute too, right? So pretty much all time frames have to be at 70% before I really truly launch it. At least that's my preference. It's good enough right now. I have some students test driving it, and it's been doing pretty well. They think I should launch it right now, right? But in some ways, I'm a perfectionist, and I want these things to help you guys as much as possible. Otherwise, I wouldn't be even doing this, right? Being public or creating any indicators, because I don't need them. I don't need indicators. I don't need anything. I have enough. I don't never have to watch another ICT video. I'm not ever going to learn more technicals, honestly, unless it's more stuff from ICT's book that may amplify and expose things that he hasn't talked about before. That just simply amplifies the things that I already know. Because what I have right now is enough. The things I teach you guys is enough, right? We have an answer to almost every scenario. So what more do we need? The only thing that's left is discipline and being organized and managing risk properly. Because once you have those are the missing links, right? If something feels like it's missing or you're hit and miss, more often than not, it's going to be because of over trading and over leveraging, or you're not managing risk properly, right? You're not protecting the downside enough, right? The telltale sign is you can find setups, you know where price is going to go most of the time, but every time you make money, you end up losing. I mean, it highlights it dramatically that, if you could just manage the downside, you'll be all right. But most people, they never get to that point. Sometimes it takes someone to put a fire in your ass to make you realize that that's something that you need to really focus on, that is sincerely the problem. It's very obvious when you go work with someone and ask them about their process, the way that they talk about it, the way they describe it. It's very easy over time to be able to see, like, okay, I know what the problem is, right? Or you can also tell if they know what they're talking about. It's pretty clear when someone describes something or talks about it, whatever the topic is when it comes to trading, especially these concepts. It's a very particular mindset, very particular way of doing things, and there's rules. And if certain elements are missing, you can kind of tell whether someone knows what they're talking about or not. So yeah, as a mentor too, I've taught over 200 people, so I kind of know what the problems are. I could tell who's lying, who's not good, who's actually good, who may be trying to hype themselves up a little bit more than they should. You can kind of just tell, and I've been doing this for almost 10 years, so it becomes pretty obvious. It's like a person that's, been in an industry that's a professional for years, and then some Joe Schmo off the side of the road comes up and says, oh, let's talk about, this or that. And then they start talking about it, and you realize that, they really don't know anything about what they're talking about. They're just trying to sound like it. They used a lingo, but the context in the lingo is missing, So, but yeah. So this is fascinating, huh? This little situation. I know a lot of you guys in my private group that have been seeing this are pretty shocked. You didn't realize that this indicator was, or you didn't know this indicator would include something like this, where it outlines your power 3 for the AM session. But you got to keep some surprises, right? You got to slip some surprises in here and there. Things become very repetitive. But yeah, so we have a lot on the way. It was an amazing session today. Appreciate your guys' time. I won't keep you guys much longer. So yeah, if you guys do enjoy what I do, you enjoy the content, you enjoy the stuff that I do on this channel, don't forget to like the video. If you guys find value or think someone else can find value in this, definitely subscribe to the channel and tell anyone you think that could benefit from a call like this, from an experience like this. Send them over to my channel. Have them hang out with us. I think that all of us together can do wonders for traders in the industry, because we all have the same passion, same drive, same mindset in many ways, and we all have the same goal, right? We just want to better our lives, and doing that, liking the video, subscribing to the channel, telling people about it helps me on my journey to helping as many traders as I possibly can. You know, who knows how many I'm going to be able to impact, but we've impacted a lot so far, and I think it's a worthy goal, right? Like I said, you know, once you are a full-time trader for a while, things get boring. So you start to move the goalpost in terms of what you're trying to achieve. And I'm at a phase where I want to start having more of an impact. So if you guys can help me with that, I'd really appreciate it. It definitely shows that you guys appreciate what I do as well. Just by simply doing something that's free, right? By liking the video and subscribing to the channel, you know, and if you're inclined to do so, spreading the word. Okay. So yeah, I think I've heard you guys enough. God bless you guys. Appreciate you guys' time. Hopefully you guys learned some stuff. Let me know if you guys have any questions, anything you guys struggle with. I'd be more than happy to help you. But yeah, that about does it for this call. So again, hopefully you guys have a good rest of your day. We'll be live again here on YouTube on Sunday. And those of you in my private group, I will see you beautiful people bright and early tomorrow as we do the same thing that we did today and yesterday and the past couple of years tomorrow. Okay. So yeah, that being said, God bless you guys, and I'll catch you on the next one.